think as a trader, you still need to have that desire to want to, like your name, desire to trade. You know, you've got to have that desire to want to trade, to learn, to see what's happening as well.
So today I'm sitting down with Andrew Mitchem. Andrew is a special person for me as a trader because he's like really good at teaching and explaining what he does, and also has really good ways of trading, but also because he was my first guest on the podcast. I interviewed him back in 2015, again in I think 17 for the 100th episode, and he's back again. So a few years later. Sure. So Andrew, how's it going today?
Great, thank you. Nice to be here. 2015. That makes me feel old.
Yeah,
I know it's your very first podcast, and also your 100th. Yeah. So no, great to be back again.
Awesome, pleasure. So I want to talk with you today about a few topics. It's going to be more informal than really formal. We're going to talk about different things. I want to know, first of all, what happened since we last spoke in 2017 or something. What's been going on?
What's been going on? Lots of things changing, actually. From a personal point of view, we've moved to the South Island in New Zealand, a place called Nelson, which we love. Flying's going well from a personal point of view. New helicopter. I now fly a twin-engine machine, which is a twin turbine. Very expensive to run, but also very, very fun, very powerful. Trading-wise is going exceptionally well. We've got a number of clients that are trading full-time. We've got a guy, his own hedge fund, lots happening on board with Forex Trading Coach. Got a guy in the States working for us now, guy in London. We're basically trying to look after people 24 hours a day with clients and traders basically dotted around the globe. So it's going well. Lots of people are making some really good progress from their trading, which is nice. I think we are definitely installing into the mindset of a lot of traders that you don't have to be trading all day long if you don't want to. We're definitely about looking, as we would have mentioned 3 years ago, looking on the close of a candle, trading probably only a few times a day, but trading with low risk and high reward to risk trades. So that message is definitely getting across, and yeah, with extra people on board, extra webinars, live webinars, etc. Yeah, it's going well. Thanks. And also we've just developed some software that's now available for the public, which is kind of like algorithm bot trading software, where we've created my own trading strategy as best we can, put into an algo, and allow people to create their own bots and run that system automatically, or part manual, part automatically. Big changes, big improvements, and happy traders.
Awesome. Over the years, if you have a lot of people to be able to quit their job and trade for a living, we discussed that a bit earlier off air. I want to know, what do you think are the keys to be able to get there? And what do you think people need to be able to trade full time?
It's interesting because I've noticed a definite pattern in those people that have got to that stage. As you know, everybody starts trading thinking it's going to be very easy. And as we both know, and probably most people listening know, it's not as easy as people say it is. It's hard. There's a lot of work and dedication involved. And I've definitely noticed that those people that have got there are the people that have shown that dedication and put in that really that extra effort up front, and they've stuck at it. And you know, they've had good times and not so good times, but they've stuck at it. They've keep appearing on webinars, they keep asking questions, they keep posting on our forum site. And I find that the people that post more and more often are almost like more and more self-accountability. So they're actually putting themselves out there and saying, look, I'm taking this trade based on this is what I've learned and this is what I'm taking. And I found those people are doing well, because then others are starting to ask them questions of, why did you take this trade? So they've got to almost do what I do on a daily basis, of explain myself. And so what it's done for them is it's almost like really refined the style of trading that they like. And it's made them so much more confident in their own ability, in the system that we teach, and it's found consistency for them. Now, not all of these people have done that in 6 months. It's taken some of them obviously a lot longer, but they've stuck at it, and then they've got to the ability of being able to look at percentages and to grow their account. A number of people have started trading for other people's funds, and a way to help them create extra income, passive income. And I know that there's a few people that have started to sell like monthly subscriptions for their own trading signals through various, sites online. So I've always encouraged them to say, look, not everybody's got the funds on board to be able to go and say, I can quit my job and make a fortune. But there's a lot of people there who can trade well, trade their own funds, build that capital up, find other forms of income from their trading, and build up to become a full-time trader that way. There's multiple ways of doing it. It's not all about saying, I've got $1 million, therefore I can make 50% and live on $500,000 a year. You don't have to go down that same track.
Yeah, definitely. It's also something that people like to believe in, the idea of only making money trading, like that alone and nothing else, only making money trading. But there's some other ways where you can multiply your income with like you said, signals, with like membership, trading for others. And I think that makes sense for a lot of people.
Absolutely. And that's what I did. When I started trading, I was doing really well. I started then selling signals. I'm back, 14, 15 years ago, this was. I started selling signals online in the early days of that. And people were making money from my signals, so they kept buying signals. And then the way that I started trading, I probably told you this in 2015 on our first podcast, was one of those guys who I used to sell the signals to said, hey, Andrew, can you come and teach me? And I put the course together and flew to Noosa in Australia and taught the guy. Spent 3 or 4 nights with him and his family and taught him. And so that's how I developed. And there's certainly other ways that you can gain income from your trading without it all being reliant on your own account. But it still comes back to the main thing. You've got to be able to trade first in order to get to that stage. That's the important first step for those people. And it's not giving up, and it's about controlling. I always say to my clients, there's 2 things you control. One's your head, the other's your heart. And if you can do that well, then you've got yourself a good chance of progressing well in trading.
Mm-hmm. What would you tell someone who starts trading today? What should they focus on? Should they learn the strategy first? Should they maybe go on the website to learn everything, all the theory first? Or how should they be able to learn things in the right order to be able to get the best result?
Yeah, it's, I suppose if they're brand new to trading, there's obviously a lot of information out there, and a lot of it not great online. Being polite, it's not great, most of it out there. So I think that there's a number of things that's important, and it is about understanding a strategy, I think, that suits the person. There's multiple ways to trade. Some people like news trading, some people won't. Some people like chart reading, some won't. And so it's finding something that works for you. And I suppose when you're brand new, you don't know that. So it's a bit of experimenting in there as well. But it's also that I strongly believe, and I've got to believe in this more and more over the last 11 years since I've been coaching, of having a good community behind you, I think is very important as well. Having that support, someone to call on, someone to ask, chat with other people who are either new or people that were in your same position like a year ago, and learn off those people. I think that's hugely underestimated in a world where we all tend to sit at home or sit somewhere in an office or something. Most of us doing this by ourselves. Even today, most of my family and friends really don't know too much about what I do, even though I've been doing it for like 16, 17 years. They got an idea, but they don't really know. So I think it's important to go and have that community or that educator, that mentor group of people that you can bounce ideas off. I think that's really, really important.
Yeah, I totally agree with that. How did you deal with that in the beginning, where you had to maybe show your family that you were good at trading, or you had to show them that you were doing it seriously? Did you have to show that, or did you have to kind of prove yourself, or was it easy to make it go and just work on trading and they were okay with that?
Yeah, well, for me, it kind of started by accident in some ways because I had just recently been or got divorced. So I didn't have too many people to really need to impress. A few people thought I'd gone a bit crazy and had suddenly got divorced and was going off the rails trying to do this trading thing, rather than going to get what was perceived to be a real job. But I saw something in it which I liked the look of. Like I like patterns, I like numbers, I like to know what's happening around the world. So all those kind of things actually appealed to me. But yeah, I didn't really have any. I was quite fortunate in some ways. I didn't have someone to say, why aren't you making money out of this, or what are you doing? Are you crazy? No one really put that on me, which I was quite fortunate in that position. I do know that a lot of people come to me and say, look, I want to join you, but I've got to ask my wife first, or something like that, and so there is that pressure there to, I suppose, to make it work. You've just gone and spent this money with some guy in New Zealand on a course, and now I think a lot of people instantly feel they have to make money back straight away. And although it's easy for me because I haven't just paid that, I try to tell people, look, honestly, the best way you can do this is to forget about making money at the beginning. You've got to try and learn the system and look at making successful trades. It doesn't matter whether it's a demo account or a small live account. It really doesn't matter. It's actually understanding how to see trades, take them, see their results. And then over time, if you do that right, then the money will follow. If you come to me with $1 million and say, look, I've got $1 million, aren't I, really, really good, you're going to lose it. People have to do that groundwork at the beginning, regardless of their financial status, I believe.
And even the really good traders that think they're too good for trading, they end up losing the money eventually. If they think that they are really good, that's when things blow up or something.
They will, and they'll end up doing something really silly. Or to start with, they'll probably more than likely get away with something really silly and do really well, and then continue to do that. And, eventually it will get you. To me, it's about a percentage. Like, this is what we're risking as a percentage. This is what we're making as a percentage. And that doesn't matter whether it's $1,000, 100,000 or $1 million. It doesn't matter. A percentage. If you're making 50% in a year, it's 50%. The danger is some people go, I've got $1,000. How can I live on 500? Well, you can't, but you've just made 50%. Look at what the banks are paying today, like barely 0.5%. You've done very, very well. So therefore you can go and sell signals, or you could start to trade for other people. And if you can make 50% consistently, I'm just picking that figure, you're going to go a long, long way.
One thing that happened to me when I actually became profitable trading a few years ago is I had like a really good run. Then I was happy, I began traveling, began doing things, and then I had like this really bad run after. So how would you suggest getting back out of that bad run, that drawdown?
With your bad run, did your bad run wipe out most of those gains you just made?
Not all, but let's say like a portion, like a 10, 20% easily.
Okay, yeah. So you still have money management in place. Yeah. So a bad run like that's always going to be a tough one, and I think everybody gets that. From time to time, you will run into that. It doesn't matter. It's just the market or your strategy or something that's going to be affected by that. I think that if you're not doing anything silly, so for instance, you're not doubling up your risk, or you're not using a martingale or something like that. If you're consistently that low risk and you just happen to have a series of losing trades, then that's kind of one of those lessons that the market's going to give you. But I think, and it's a tough one, it's a tough pill to swallow, but everybody will have a losing run at some stage. But I think it's important that you don't go chasing that shiny object, as in don't go chasing the next system or adding something to your system to try and improve it, because back before you had that losing run, you were very confident in it and it was going nicely. And I think that people were very quick to jump on to, oh look, it's losing now, rather than sticking with it providing you're not changing the system of what worked, don't go out there trying to find the next thing. I think that's important not to do that.
I'm laughing because this is like what actually happened back then is I kind of took the system, tried to make it better to take more trades or have less drawdowns, and eventually went worse. But I was able to recover. So I realized quickly that I was doing things wrong and I was able to get back on track. So,
yep. That revenge trading, or that, taking more trades, or suddenly going to 5-minute charts when normally you don't trade under an hour chart or something, trying to do all those extra things is quite tempting, but also likely not to end well.
Definitely. How did you find your trading style when you were trying to find it in the beginning?
At the beginning, goodness, I suppose I tried a lot of things at the beginning. I tried things with breakouts. I tried news trading. I tried all sorts of different things. What did it for me was when I started to use Fibonacci retracements and extensions in the way that I trade them. Like, I don't draw them from swing highs to swing lows or anything, because a lot of that I found was beneficial only in hindsight. And so when I started to draw them the way that I started to back then and still do today, I got to see the consistency with them. I liked them because they gave me entry and exit levels that were in proportion to the market movement at that time. Depending on the currency pair or the time frame chart that I was trading, they're all in proportion to that movement. So I got to see so many times when a price would retrace to my entry level and then turn around and go to my profit target. So it's when I saw that happening consistently, it made a difference. And so rather than just jumping in, because when you're new, everybody thinks you just need to take a market order. And so I started to use limit orders. So buying below the current price and selling above the current price. And what that did for me is, one, it took out the emotion of needing to be in the trade right now, because I wasn't like frantically trying to work out my lot size and get it on the keyboard as quick as possible. I didn't have to do that. I had time. And the other thing it did is, with the retracement, it got me a higher reward to risk from my trade when it worked out. I still had controlled risk, but I had, because I was getting in on a buy trade at a lower price, if it got there, I had a smaller stop loss, and therefore it didn't need to move so far as to give me a high reward to risk. And so I was starting to see that, like everybody, you have losing trades, but I was starting to see that when I had profitable trades, they were more than making up for like 2 or 3 of those other losses. And you kind of see your account step up quite nicely that way. It doesn't go in a smooth line. It more steps. A couple of losing trades, decent win. A couple of losing trades, decent win. And that definitely helped. And as soon as I worked that out, I was kind of on the road to the way I wanted to trade.
And so for people that use Fibonacci these days and cannot get results, which I tried before, so how would you tell them to change it to be able to either look at it the right way or use it the proper way, the Fibonacci?
Using Fibs. So for me, I always have to look at a suitable candle first. So I identify the trade setup that I want to take first. And then once I've identified that trade, then I draw Fibs over that setup candle. So the good thing is with that, like I mentioned, is that you're, let's say, let's pick some numbers. Let's say you're on a daily trade and you're on something like the pound New Zealand dollar, which moves a lot. Let's say it moves 200 pips. When you're drawing your Fibs over the candle, your stop loss and your profit target are relatively large. The large amounts of pips. But if you were trading, let's say, the euro pound on a 4-hour chart, it might only move 30 pips in 4 hours. You're still drawing your Fibs over it. You're still taking a retracement and looking for an extension for your profit. Your ratio of your trade, your reward to risk, is still much the same. But you only, you've got quite small profit target, because your setup candle was only 30 pips as opposed to, say, 200 pips. But it's still going to give you, depending on where you put your stops and your profits, it's still going to give you like somewhere between about a 2 and a 4 to 1 reward to risk trade. So it's still going to give you really good outcome. the thing that I like about that is it then therefore doesn't matter if I'm trading with a daily trade or a 4-hourly trade. It doesn't matter. It doesn't matter if it's the pound New Zealand with, let's say, a profit target of 150 pips, or the euro pound with a profit target of maybe like 20 pips, let's say, 25 pips. They still have the same reward to risk.
So your Fibonacci levels are used as targets, or?
Yep. I use them as a target as well. Yep. So I use an extension level as my target. I draw the fibs over the setup candle. I look for them to retrace to a fib level. My stop loss is set by a fib level, and my extension is a fib level as well. I always adjust them according to if there were any nearby swing highs or swing lows, or if there's any round numbers nearby, like a number ending in 00 or 50. If any of those are nearby, then I'll just adjust that level from the fib slightly. But like 95% of the target's pretty much set by the fibs.
So this seems to be quite a manual trading style. So how did you go from there to using robots in your trading? How did that happen?
I've been trying to make robots and try robots and create software for years. I've had people write software for me, and to be honest, it's never worked. Never ever managed to get it work, whether it's someone else's strategy or anything. And so I got working last year with a client of mine who joined me back in 2012. He's a programmer. He was an engineer, and he's now a programmer. And he's developed a great piece of software based on my strategy. And what it does is it allows the user to create their own group of bots or algorithms based on what time frame they want to trade, based on what patterns they want to trade, what candle patterns, whether they want market orders, retracements, whether they want continuation trades, reversal trades, all those type of things that I talk about and trade. And what it allows us to do is to create your own set of bots and test them. It's very, very accurate back testing data. It tests in like very, very short space of time. You can have different risk levels as well, whether you want a dynamic risk or a percentage risk or dollar risk. You can do all sorts of different things. Very, very user friendly. And you can create a bot in under a minute just by toggling on and off a few tabs. And you then create, once you've tested it, you then create a group of bots together, put them through a portfolio, so you're running them side by side in effectively what would have been real time. And then you have the option of having new signals going forward come through to you via Telegram, and it shows you the chart on your phone or on your computer with the setup that you're taking, and you click yes or no, as in I want to take it, or no, I don't. Has all the money management, stop losses, etc., all built in. Or we have a level there where you can choose to have it completely auto trade for you. Some people choose a combination of both, and they go, well, in the daytime when I'm awake, I want it to come through manually when I decide. And when I'm away or I'm asleep, I want it to auto trade. And you can basically be as selective as you want. Fantastic bit of software. It's working really nicely for people. And it's just working well. We have MT4 integrated into the software, so you don't need to go and buy an external virtual server or anything like that. It has a demo account built into it, so you can test it, trial it in real time on a demo. And you can continue to trial bots as well, and you can select which ones actually get traded live on your account and which ones just continue to be tested in real time. It's pretty cool. It's like nothing else I've seen in the trading world ever before. We're really excited by it, and getting some good results.
And how's the performance of that comparing to trading manually? Is there a big difference?
Yeah, it is different, actually. It is different. It's quite interesting. It tends to, because it's a robot, it tends to, like when we were creating it, the more rules that you put in it that we see as people, sometimes the worse the results were. And so we had to be quite relaxed on some of the settings. And so I think why that is like, as the human eye, there's certain things that we know that might be coming up, or news events, or something's happening on a different currency pair that you just cannot create in a robot, that human intuition. So we had to be quite relaxed on the rules. And so sometimes it takes trades and I look at them and go, I'm not quite sure if I have it on auto trade. I'm not quite sure I'd take this, if it were me just seeing the setup. But because I have mine on auto trade, I just let it do its thing because I'm happy with my portfolio, my back testing. And it works remarkably well. It's really cool software, but the results are, I'm finding that, let's say, for example, in June, it had fantastic trades. It made just over 20% for my live account on auto trading. July, it had a slight loss, but my manual trading was up in July. And it's odd. I still prefer to, I'd always want to have my own manual trading running alongside this. 2 different accounts, but I've decided to create a group of bots that I like, a portfolio that I like. I love the results. If they come through, anywhere like that in real time going forward, it's going to be unreal. So I accept that sometimes there will be trades that I just wouldn't take myself, but I'm just leaving it to do its thing. Just leave it alone. And I continue to do my own manual trading on different accounts.
This makes sense. It's something I have to get used to first, the Algo thing, where you gotta let it run. You don't like the result until a lot of time, but that's still good. At the same time, it's also hard to switch from manual to Algo, where you as a trader don't do much. You just let the Algo do things. It takes some time to adapt.
You've got to be really careful, I think, if someone went straight to Algo without any intervention at all, because you may as well just go and buy a signal service from someone. But, I still like to see what trades it's taking. I still jump in from time to time and close a part of a trade, or before like non-farm payrolls, or before the weekend, those type of things. So I still have a little bit of intervention there, only where I see fit to make it better. But in terms of actually selecting the trades, the bot does it for me now. But you still need to have, I think, as a trader, you still need to have that desire to want to, like your name, desire to trade. You've got to have that desire to want to trade, to learn, to see what's happening as well.
Mm-hmm. Yeah, I agree with that. I think it's good to look at a trade for sure. Make sure there's no mistakes. When we first used Algo, there was like a lot of mistakes you had to correct first. Things we didn't even think about to code or to not code, and then they were not in the script, and then trades would be taken that didn't fit the criteria. So of course you have to monitor it. At the same time, you have to have a balance of it, where I think a new trader using Algo, they might make mistakes. They might kind of tend to interfere too much. So.
One thing we have noticed, because we've now taken this live to the public who have not been through my course, like to start with, we only opened it up to actual coaching clients. And one thing I've noticed with the non-coaching clients is it will attract people who think it's going to be this magic pill. And that's not the way to trade, as we know. We talked about drawdowns and when things don't go quite so well. But with my coaching clients, because they know the strategy works manually, they're happy to create the bots and leave them and let them run. Whereas for, I suppose, people that don't know me or my strategy so well, if in the first few weeks they're not seeing these amazing results that they're expecting, then it's easy for someone like that to turn off of this and then go chasing the next thing. So I suppose our job is to say to people, like, if you're going to do something like this, just give it 3 months and set up bots that you like, and just give it 3 months. The market might give you a real horrible 3 months, but if your live trades are showing the same trades as your back testing did over that same time, then there's nothing wrong with the system, because the system's working. It just happens to be, a tough market right now. And the flip side is that in, sort of June, when we had 20% on auto trading, everybody thought this was just unbelievable and it's magic. And we were expecting 20% again in July. So people are very, very happy, of course, when results are good. When results are not quite as good as they don't get 20% every month, people are very easy to sort of jump ship to something else. And it's a bad trait of a lot of people who get into trading, unfortunately.
So now we are into the middle, let's say the heart or the end of the virus, the quarantine, the lockdowns and everything. I'm not sure that's why I say middle or end, but so how do you suggest people to trade now? So they've had the time where they have high volatility and maybe really, really good gains. Now things start to maybe slow down a little bit, I feel. So how would you suggest people to look into trading right now?
Am I looking at trading now going forward? Yeah, so I mean, you're right. Like back in March, April, the market was going crazy and it was, it's just some great trades out there. And so, as things have gone through the last few months, July's always has been, and possibly August, traditionally not the easiest months to trade due to the Northern Hemisphere summer. Maybe this year it's not going to be quite so the same because, there's not so many people away on holiday or vacation. But like, we're just continuing to trade the same way. What I always try and stress to my clients is try to look at multiple time frame charts if you can. And when I hold my webinars, some weeks I find that when I'm like reviewing what's happened this week, sometimes, for instance, I'll have lots of trades to show clients on 4-hour charts. The next time I have a webinar, there might be lots on daily charts or 12-hour charts. Last week, I showed lots on 1-hour charts. And so you never know in advance when you start the new week on a Monday, you never know what the market's going to do for that week or for that month. So I think it's really important that you have the ability to trade. And this is what we did on our last podcast 3 years ago. We talked about multiple time frame trading. And I still think that's really important, because you might find there are no setups on the daily charts. Today was a prime example. We had no setups on our membership site today on the daily trades, but we talked about 3 setups on the 6-hour charts and 1 on the 8-hour charts. It's just the way it was today. Yesterday, there were 2 on the daily charts and we posted 1 on the 6 and 1 on the 12. Just the way it was, 2 different days, 2 different types of time frames showing the setups that we're looking for. So I think, going forward, you never know what's coming. The beauty of trading multiple time frame charts is it still really only requires you to look at your charts 2 or 3 times a day. And so we're not saying be there all the time staring at your screen. We're saying when the charts change over, for instance, when the daily charts change over at 5 p.m. New York time, I'll look at the daily, the 12, the 8, and the 6-hour charts. So I can scan those 4 time frames all at the same time. When it gets to the 5 a.m. New York time, because that's in the European session, I'll look at the 1, the 4, the 6, and the 12. So I'll scan those 4 time frame charts. So by looking at my charts just twice a day for maybe 10, 15 minutes each time, I can scan those 8 different time frames. Sometimes I might find the 12 hours to show me trades. Sometimes it might be the 1-hour charts. You never know in advance. And so that's the beauty of having that ability to not be rigid and say, I'm only going to trade 1-hour charts or I'm only going to trade daily charts.
Yeah. If you have a process to go through your chart, then that makes it easy. But if you are like most people, just flicking through chart and different pairs and different time frames, that's where things get really confusing. So you gotta have a process for when you look at which ones and which pairs.
Yeah. So for me, I have like the profile set up. So I'll scan in my morning, I'll scan all the daily charts. So I get my higher time frame kind of idea where things are. And I'll scan through those. If there's some there, I'll write them down. Then I'll go through the 12 hours and do the same on the 8 and the 6. And because I'm looking for pretty much the same pattern on any time frame chart, I'm not really too worried whether it happens to be a daily trade that shows or a 4-hour chart. It doesn't really matter to me. I'm still looking for the same type of pattern. I want the candle to be in the same type of part of the chart. I'm still looking for my round numbers to help me with my stop loss protection. I'm still drawing the fib over the candle, whether it's a 4-hour chart or a daily chart. Everything that I'm doing is pretty much the same. It just happens to be called a different time frame chart.
So each profile will be one different time frame for all the pairs?
Yes, I'll have profiles set up for dailies and I'll scan through all the pairs. And then I'll go to a different profiles for 12-hour charts, scan through the pairs, 8, 6, 4 hours, 1 hour. Yep. Just have different profiles. It makes it real easy to go through. I don't toggle between like time frames like on MT4 and up and down. I just have a profile set with all the currency pairs at the bottom, all my candles there, my divergence and pivot points that I'm looking for, but one profile per time frame.
Do you ever add or withdraw pairs from your trading instruments?
No, I haven't. No, I'm still trading the same ones. I've added a few recently. You know, I've added like US Singapore and the Aussie Singapore, a couple of those, the Euro Norwegian Krona. I would never have traded that maybe like 3 or 4 years ago. But some of those pairs that have some pretty nice price action, that have low spreads for most of the time, I've just added a few extras in there as well. But the same 28 that I traded years ago, I'm still trading them today, plus a few extras.
I like US Singapore a lot, so that's a good thing.
Yeah, it's a nice moving pair. It's really good. I generally only look at it against the US and the Aussie. I haven't really ventured into too many others yet with the Singapore dollar. I like it a lot. The Swedish krona a bit, but mostly, some of those sort of Scandinavian currencies a little bit. I've not really got into sort of Mexican or Polish or South African rand or any of that really. I find that they're probably potentially not enough price action or volatility there to give me the candle patterns that I'm looking for, or for the candle patterns to work that I'm looking for.
And how do you go about adding new pairs? Do you backtest them first? You test them out truly, or how do you?
No, I'll to be honest, one of the beauties of being a coach is that other people start talking about things like this, and I get asked those questions on webinars or on our forum site. And someone will say, "Hey, Andrew, have you seen this trade on the Euro Norwegian Krona?" And I go, "Oh, I don't even have that open on my chart, so let's go and have a look." And so, I've got to add a few extras like that because of other people talking about them, really. And then we look at them, and we go, "Well, that's an outside bar, and it's got divergence, and its stop loss is protected by their own number, and everything that we look for." And we go, "Well, why not take it? You know, it's got the pattern that we're looking for." And so we take the trade, and, you know, the trade works or it doesn't, but let's say hopefully it works. And we keep that pair. I don't go down to like 1 hour charts looking at those. I tend to find those slightly more exotic pairs work better on the longer time frame charts. The spread, if it gets big, is not so much of an issue then as well. So it's I generally look at them on daily 12, 8 and 6 hour charts. I don't really go smaller than that on those newer pairs.
Awesome. So once again, Andrew, what can people find you if they want to connect with you or reach out after this interview?
People can find me at theforextradingcoach.com.
Awesome. And you've got your Algo as well?
Yeah, the Algo is called tftcpatterntrader.com. I might see if you can put a couple of links on with this on this page. Yeah, I mean, it's the Algo is awesome. In terms of like the Forex Trading Coach itself, like I said, we've got extra staff on board now. We've got a guy in America, a guy in London who also speaks Russian. We've got live webinars in the European session and the US session, which we never used to when I was doing that purely by myself. We only had the European session. We've got someone monitoring the forum right around the clock now. It just makes it a lot more, I suppose, like everything, we've evolved, we've become better, more professional, needed to serve and help more people, living different places. So we've evolved with that. I've got a great tech guy. Anybody ever needs any tech support or can't load indicators, etc. We're tracking well. People are enjoying it. People are doing well. There's free webinars on the site as well. We've now got on-demand webinar for the client. For non-clients, just the basic intro to trading webinars. So people don't have to wait for a webinar next week. They can get those on demand as well.
Awesome. Thank you, Andrew. And if you like this interview with Andrew Mitchem, make sure you comment below the video. We'll be sure to put all the links there for you to check out and reach out to Andrew. It's going to be a pleasure for him to help you out and help you go on your journey.